right, good morning, traders. Big moves in the markets after yesterday's retaliatory tariffs came in softer than expected. China, the U.S. delayed tariffs on Mexico and Canada for a month. Now the big question is, will Trump and Xi strike a deal, or is this just a temporary pause in the trade war? So let's just kind of break it all down. Soybeans bounced back overnight after dipping on initial tariff fears. China's response was more of an olive branch, targeting U.S. energy and ag machinery with a 10 and 15% tariffs instead of a full-blown trade war. That's helping ease market jitters. Meanwhile, South American weather is still a big factor. And Argentina's getting some rain, but Brazil's bean harvest is still behind schedule at just 9% completed versus 16% last year. Despite delays, production estimates are mixed. You're seeing cereals exchanges actually raise their estimate to 174, while Stone trimmed theirs to 170.9. U.S. soybean crush hit a new record at 217.7 million bushels, which supports demand, but bean oil stocks came in slightly below estimates. All right, now let's look at corn. I mean, we're seeing if we can't, we're getting some wicks up above that 1060. We're looking to see if we can't get any closes above there. All right, so corn prices held firm after the tariff delays for Mexico and Canada, right? The key here, Mexico's commitment to sending 10,000 troops to the border to curb fentanyl trafficking. Delay gave market some breathing room, but China is still the wild card there. Their tariff targeted energy and machinery, not U.S. corn, which is a positive for now. Brazil's Safrana corn planting is just 9% done, well below the 5-year average, which could tighten global supply later this year. Meanwhile, U.S. corn export inspections are up 33% year over year, keeping demand pretty strong here in the U.S. All right, and then let's shift over to wheat. We're looking, wheat followed corn and beans higher, hitting its highest level since November. Traders are finally shifting their view on Trump's tariff threats, seeing them more as a negotiation tactic than an immediate disaster. That being said, weather in the plains remains mixed, with Kansas City wheat conditions improving, but Nebraska taking a big hit. Russia's export prices have risen, while Ukraine's export forecast was trimmed slightly, both supportive basically for the wheat market. So the bottom line, markets are stabilizing after the initial tariff panic, but headline risk remains pretty high here, boys and girls. Trump and Xi are expected to talk again today, but really haven't had like a exact time. So any sign of process could push beans higher towards the January highs. For corn, it's all about keeping that momentum in above 490 to make a run towards that $5 handle. And for wheat, if we break through yesterday's highs, fund short covering could spark another leg higher here. So yeah, we're looking, if we can't get above that 570 and higher. And then yeah, you're still looking at the 552, 550 area for some support. So that's your market rundown. Keep an eye on headlines today. One tweet from Trump or Xi could swing these markets pretty fast. So make sure you like, subscribe, and stay tuned for real-time up one.